안녕하세요. 하나금융투자 해외 파생영업팀의 김신혁 과장입니다.
안녕하세요. 최철원 대리입니다.
반갑습니다.
So let's get to the main point. A lot of investors are interested in the outlook of crude oil and Brent oil price in the future market. Could you tell us the price outlook for the next year?
As ICE, as the exchange, we don't do our own forecast because that's not our role.
Mhm.
But in general, the most recent many forecasters from Reuters, for example, their most recent poll showed a forecast of around $75 a barrel for Brent, a little bit higher than where we are. I mean, that's a reasonable expectation, and the market consensus is what it is. So what I like to do is simply talk about some of the upside risks and the downside risks to that outlook. Key factors, really at this point, the driving factors seem to be more bearish than bullish. So there's three things. Number one, top of the list, obviously that's Omicron. The International Energy Agency, in their most recent report, they didn't make much of a downward revision to the outlook to next year's demand because of Omicron, but it was actually, on an annual average basis. But if you look at the first quarter, they actually did make a significant downward revision to the first quarter only of 0.6 million barrels a day. So Omicron is clearly a bearish risk. Unfortunately, the next question you need to ask as an analyst and as an investor is what comes after Omicron. Nobody's promising that Omicron is the last one, the last variant we're going to see. Point two, another bearish factor is that key central banks around the world, so the US Fed, the European Central Bank, the Bank of England, the Bank of Japan, are all in the process of phasing out the stimulus packages, economic stimulus that they had put in place to deal with COVID. And in fact, they're all preparing to raise interest rates. Or in the case of the Bank of England, last week they already raised interest rates. So again, just the way COVID is a risk to economic growth and oil demand growth, raising interest rates is the same risk. It's a downward risk to economic growth and oil demand growth. The last one, which I already mentioned, but it bears repeating, is stock builds. We are in for stock builds throughout 2022, should put some downward pressure, or at least put a soft ceiling on prices. That's something the market has not seen much, or not seen at all, in the last year and a half. Thing to mention there, though, is the starting point for stocks right now is that stocks are pretty low, pretty tight, well below the pre-pandemic 5-year average. So you do have an offsetting factor a little bit. Two other wild cards which investors should keep an eye on, and the markets should keep an eye on, are OPEC Plus and the Strategic Petroleum Reserve releases. So OPEC Plus surprised a lot of people at the beginning of December, where even after the emergence of Omicron, and even after consuming countries announced a very big release of strategic reserves, I'll come to that in a minute, OPEC Plus announced that they were going to continue their plan of increasing output anyway, which is around 0.4 million barrels a day each month. That's their game plan, which has already been agreed to for all of next year. That's not as bearish as it sounds for a couple of reasons. Number one, OPEC actually has some supply limitations, some capacity issues, particularly for countries like Nigeria and Angola. So for the last 6 months, their increases have been more like 250 KBD per month, not 400 KBD per month. So that's important to keep in mind. And the second one is, and this was made very explicit at the last OPEC Plus meeting, they're going to continue to be very vigilant and watch the markets carefully. And the Saudis and OPEC Plus said they would react immediately if they, for example, were to see another price collapse happen or a collapse in demand. They would not even wait for the next OPEC meeting. So that's a very strong message of, I would say, reassurance to the market. So the point is, even though OPEC Plus continues to increase output and that remains their game plan, they're I think successfully giving reassurance to the market. Hey, we are going to continue to keep this thing under control. The second one, the SPR release, you may recall also in late November that the U.S., China, India, South Korea, Japan, and the UK agreed to coordinate a very large strategic petroleum reserve release of as much as 80 to 85 million barrels in order to cool off prices. Again, the headline is that seems pretty bearish, but what happened after Omicron emerged and prices, had a very big correction, the consuming countries that I just mentioned essentially sent the message, and the U.S. sent this message very clearly. They basically said the same thing as OPEC. They said, listen, we have this tool, but we're going to be flexible. In other words, they're going to release a smaller volume of crude, perhaps delay the schedule, because they didn't want to see prices overcorrect to the downside. So again, it seems bearish on the surface, but it's not as bearish when you actually read the news. So OPEC Plus and the consuming countries are both being very flexible, which means they're both, they're talking to each other as well. They're both going to try to the extent they can, smooth out some of these big increases and decreases in oil prices. So those are some of the key wild cards. But again, the bottom line is between Omicron, central banks preparing to increase interest rates, and stock builds, that's why the market has come up with a $75 Brent forecast for next year. In other words, the upside is limited.
If you would like to give any additional information to investors, please go ahead.
Yeah, so the last point is really about Brent. We've talked a lot about the markets and the outlook. Brent is the global crude benchmark, right? Brent prices either directly or indirectly set 70 to 80% of global crude. For example, Dubai, a key benchmark of Middle Eastern crude, mainly for Asia, Dubai itself is priced off of Brent. So Brent is really the global crude marker. And the reason that's the case is because, it has no constraints in terms of logistics. It's a waterborne crude. So unlike WTI, which has severe storage constraints at Cushing, and that's why prices went negative in April of 2020, Brent never did that. And big picture, Brent does not reflect U.S. markets or a region within the U.S. Brent reflects the global markets. So as an investor, if you want to make an investment in oil, the global economic recovery, as an investment in global oil demand growth, for example, Brent is really the best instrument. As I mentioned, Brent in Dubai specifically, which is the marker for many crudes that supply countries in Asia. If you're an investor based in Asia, what you're seeing in the news every day and reading and what you're thinking about, is much more related to Brent than to anything else. Also, when there are events, either upside or downside, because Brent is a global crude, events such as an OPEC cut or an OPEC increase, that's going to affect Brent more than WTI. Something like, if you recall, 2 years ago, Iran attacked Saudi Arabia, and for a brief period, Saudi Arabia lost production capacity. Something like that is going to affect Brent more than any other crude. Or, for example, in a bearish case, Iranian crude coming back into the market, which is something that participants will be following. That is going to affect Brent more than other crudes. So basically, the message is that Brent is the global crude, and history shows that that's the crude that more reacts to market events.
오늘 귀한 시간 내주신 마이클 센터장님께 다시 한번 감사드리고요. 다음에 더 좋은 내용으로 다시 만나뵐 수 있었으면 좋겠습니다.
저희 하나TV 구독과 좋아요 잊지 마시고요. 다음에 뵙겠습니다.